In the next 600 seconds, I'm going to provide you guys with a quick update on the markets. But before we start, as always, I need to stress the trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose all of our invested money. Please also bear in mind I'm going to conduct some live technical analysis, so I'm going to tell you what I think is going to happen in the market and where I think traders are going to potentially be buying and selling, but that doesn't necessarily mean that you should go out and do the same. So you always need to use your own judgment when trading. Okay, let's begin, and we're going to begin with the euro as we usually do. So a few days ago we said break to 23.08 can take you down to these levels. It did. The market is now bouncing to the upside. Fibonacci from this level, which I see as a trend defining level, all the way down to the low, gives me these three different levels, and I suspect that from pretty much the breakout level to 123.12 the market is going to roll over and try to move back down lower again, and then potentially lower. Obviously, if it doesn't go up all the way, there's not too much we can do about it, right? The original entry was here, and sometimes we just miss. Now, the 50% correction level is, which I think is probably the optimal entry to be bearish, just because here your risk is 100 pip. If it goes down to the low, we make 100. If it continues to slip to the downside, we can make up to 144. And those risk reward ratios are really important when trading. Here's the price of Bitcoin, and Bitcoin, it's moved up quite nicely and is stabilizing. But if you look at this, compare this section with this section or this section, it's not a big deal really. The market could, of course, bottom out, and maybe it did bottom out down here, as I've been saying. But for now, the technical trend remains bearish below 95.07, and the market could roll over from these levels and just go down as this little arrow here. The alternative is that maybe when we look at this on Monday again, the market has traded more sideways, and then if we have a bullish breakout, we might look to get long. But for now, I see it as more likely that this market is going to head lower rather than higher. Next week as well is the beginning of the Chinese New Year. Starts on Wednesday, and it's going to be very quiet from Asia, and that could easily influence price. I'm not sure exactly how it's going to work, but I do think that it's going to be less volatile, which could be good. Again, probably more sideways trading for a week or two, and then maybe bullish. But for now, this is a short-term downtrend, so I think it's important to respect that. Here's the price of crude oil. A few days ago we said look to sell up here for this to go to the downside. It did work out fine. Now the market did slip below lower here and touched the next set of lows here, and this is followed by another low here, which is the December 27th low at 59.34. Now I think that this is an extension to this decline. Like here, for example, look at this. This traded sideways, remained at elevated levels, and then it declined, and then it went up, and then it went down, and then it kind of stayed sideways. But it was still kind of confined to this big range. So if we took out this level, it was not a big deal. But here, this little thing here, I think this is maybe people getting stopped out rather than people necessarily adding heavy shorts down here. So I think this is where people that got late into the party got involved, and I think we could easily squeeze to the upside, and maybe we're just gonna go up to 61.60, but which is these levels here. But I personally think maybe let's see what happens, and if possible, I want to be bearish from higher levels, which is 62.23, because I think what might happen might go up, and then we start to stress everybody that got short here, and the market pushes up and up and up, and then here or here it rolls over as what we call the weak hands are getting squeezed out. So again, I am bearish. This could most likely is going to trade to the downside because of the downtrend, and next set of targets is 59.34, 59, but the optimal entry, because this market is so oversold, is up here at 62.23. Again, that's what I think. The way traders are focusing on this. Now this is the price of gold, and we made some adjustments here. So this is the trend defining level. I had it up here, then push it here, now I put it here. So that's the new trend defining level, and we did not go high enough yesterday to re-enter a short position. This is a new idea. Fib from the low So from the high to the low gives these levels, and the market looks to me, unfortunately, that maybe it already, pulled back from these levels. So I'm gonna adjust this a little bit. Gonna work with the 50 level. So if we're lucky, it swings up to 50. Can of course push even higher, but as long as we trade below 1,333, then I suspect we can go to the downside. As well, we have this big head and shoulders in play, which suggests that we can go down to 1,289, which is down here. Take out the low, you see more selling. Here's the DAX 30, and I'm bullish. I mean, my system itself lately, because it's such a market that gives us so many false breakouts, hasn't really been working exactly as the way I wanted it. But we're down at the lows here, and I suspect that if this level holds, we saw levels from August last year, and then potentially we're going to bottom out here. Just need to remember this though, in the very short term we are dealing with a downtrend. This is a high, this is a high, and this is a high. If I show you this, this is the latest high. So obviously if you're looking for a real strong reversal, and then hopefully slowly moving to the upside, then this is the level you want to work with. So there's different ways of operating. Some people, they buy a little bit here, and then when the trend actually turns bullish, they buy more. And that's it really. So I remain bullish. Hopefully this can bottom out from these levels. See no real reason to get any panic as long as you're above this level. But if we trade below this level, probably it's gonna spike down, then up, and then maybe down to 11,467. And that's it. That's the DAX, and I think we pretty much just covered all the main markets. Now for today, it's a special day. Is the Canadian non-farm payrolls. We've been looking at that here at Trade Captain, and it's a bit like the non-farm payrolls, except that it's only, it's more about dollar CAD, it's more about Euro CAD and other CAD pairs. And what we're gonna do is that today we're gonna do a live webinar at 1:15 London time, 1:15 p.m. and we're gonna look at the data. I have a Bloomberg platform, so when the data comes out, I'll tell it to you guys, and then we're gonna look at the markets. We're gonna hopefully find a setup where the CAD could look to gain in case of good numbers, and we're gonna look for a setup where the Canadian dollar looks to lose because of bad Canadian numbers. So that's what we're gonna be doing. It's very straightforward, just education, webinars. It's a go-to meeting webinar, so it's not YouTube live streaming like we're doing here, so you need to sign up. And that's it. Guys, have an amazing day, have a good Friday, and I'll see you guys tomorrow, sorry not tomorrow, but on Monday, same channel here at 9 a.m. GMT. If you notice that the page hasn't been updated, then just keep on clicking on F5 to reload the page, and then eventually you're gonna see this video. The alternative is you just follow us on on YouTube, and you get a notification when I'm live. Okay guys, have a good day and a good weekend. Cheers.